Ladies and gentlemen, we are back with another SoFi video, another beat up stock, down after earnings. We'll go a little over earnings. There's one thing the main thing, I just watched the Felix and Friends video. It has like 20,000 views. I'm sure you guys saw it. And like the main thing he pointed out is about SoFi is a little incentive deal with their CEO. So the incentive program started in 2021. I'm not going to explain it as good as he will. So check that video out. I will leave a link in the description. But basically, in 2021, there's like stock options he got that by 2026, if the stock hits the price targets of 25, 35, and $45, he will be rewarded shares for each target hit. And if it hits $45 by 2026, he will earn altogether about $300 million. Insane. So what I love is that nobody wants the stock to go up right now. None of us as much as the CEO, which is the best thing because he's the one who has the most power out of us to control the stock and organize the company so it can grow its business, and the stock should follow. They've been growing pretty good. They did beat the quarter earnings and they are down after earnings. The stock is just down, down, down. Nothing new. And if you look at the technical analysis, what I'm hoping the stock does, I'm hoping it fills this gap down at $5.40. It's a 20% drop from the current price, and then I'll load up properly, and then hopefully we can see it fill these other gaps and just go to $25, $45. I think we'll all love to see that. So yeah, SoFi stock, they reported earnings. We can go check through the earnings. And then another reason I'm really bullish on the stock is the interest rates. So currently their lending revenue is growing and they're giving out more and more loans while the interest rates are so high. So if the Fed cuts the interest rates, which I believe they will sooner or later, maybe this year, we will see the stock explode just because of that, just because of those news. This stock will go up, guaranteed, and the revenue will follow because they will be much more profitable and they will grow their revenue much better because it's just a better environment for their business. So we can see the chart just kept on growing for Q2. They added 640,000 new members, and SoFi is a really great company. They're bringing out new products all the time. I just read about this product that they added, Zeely, I believe, or Zella. Let's see. So what this is, it's pretty much like Venmo. The app is on the website or on the SoFi app, and then you can send to anyone who has the same app. It's pretty much like an e-transfer for those fellow Canadians here. And they just keep on adding products like that. With SoFi, you can invest in stocks, you can invest in crypto, you can raise a mortgage on a house, you can open a savings account, a checking account, you can get a credit card. The options are just unlimited. So it's like 50 degrees in here. But they just have a really good business model, and a lot of the products are being used more and more, and members are growing, and these members are here to stay. If someone has a bank account or like a TFSA with SoFi, that means they trust them enough to get a mortgage. And if someone gets a mortgage through SoFi, they will trust them to get everything else, all the other products, because it is a lot about trust, and they're building that trust. And we can see that in the member growth. More and more people are joining. SoFi has been doing an amazing job with that. We can see Galileo is also growing. Hopefully the viruses aren't growing. And yeah, it's a pretty good quarter. And then I'm not going to bore you guys. I'm sure you saw a lot of videos, but I'll just go over the general news about SoFi and how I'm feeling about the stock. I already said I wanted to go down. I'm sure you guys don't. But another dangerous thing that we're going to go through here is diluted average shares outstanding increased by 13%. So they diluted the shareholders to raise some money. The revenue grew by 23% year over year. Not profitable, but this quarter they just got to be profitable. I think they got $17 million in earnings for Q2 2024. They did even better the quarter before, and I believe they will continue and that they won't have a negative quarter from here on out. And it's very possible, and I believe they can execute that easily. Revenue growth, I think their projected guidance revenue is about 2.5 billion or 2.4 billion for full year 2024, trading at a $7 billion market cap. Not too bad. At the rates they're growing, they're only trading at 1.2 times book value. Just in, I believe, 2024, or just in this quarter, I'm talking out of my butt here, but they raised from $800 to $1 billion in tangible book value. So they've been having one thing that I really want to go over the report that I really like to see is the delinquency rate. So we can hear $2.4 billion for 2024 full year guidance. You can see that the net income, $175 million in net income, which is very nice. Tangible value growth. So so far this year they added 300 million tangible book value, and they're projected to add up to $1 billion for full year. Beautiful. You guys can go through this yourselves. I'm sure you already have. If you're an investor, I'm more of a value investor. I invest in the business itself and look at the business, not as much technical analysis. We'll take a little more of a look into that. But one thing that I like to see, I remember the numbers. So their delinquency rate, 90-day delinquency rate, Delinquency, what is that? It's for loans that have not been paid off. And I made a stock video on a couple other stocks, Chinese stocks that are similar to SoFi, and their delinquency rate was both between 4 and 5%. So 4 to 5% of the loans were not paid off when they were supposed to be paid off every 90 days. SoFi's is like 0.6% on personal loans, and on student loans it's even lower. So these guys are giving out loans to to quality customers, which we really like to see, and that's the whole thing. We want this business to be safe, and with quality customers and consumers, they will be able to stay profitable and become more profitable. Okay, one thing. Let's check out how much they've been diluting the shareholders, how many shares they've been issuing. So if you look at the income statement, we can find it down here on Stock Unlock. I love you, Daniel. Daniel Pronk is the co-founder of Stock Unlock. So we can hear they have 1 billion shares right now, and 2 quarters ago is 960 million. So they have been diluting the shareholders a little bit. Too much cash in hand they have. So yeah, since this is kind of like a bank stock, we can't see exactly how much cash in hand they have, but I will put a number right here for you guys. But yeah, other than that, another thing, if you look at insiders buying and selling, insiders have been selling. No one has been buying besides issuing grants. So you can see CTO, CEO of Galileo, just selling 360,000. But if you look at their full shares, this guy sold 50,000 shares, but he still has 450,000 shares left. It's not like he's sold out. Nobody's selling out. And one really cool thing that I like to see is we have ARK Investments here. Kathy Wood loaded up on SoFi. So third month of 2024, the fund added 14,000 shares, and they now have 16 million shares. 14 million shares, and now they have 16 million shares. They own almost 2%, 1.5% of SoFi. Vanguard owns 7%. They loaded up last time, end of 2023, last month. I like to see it, but again, the insider ownership, nobody has really been buying. Let's see what the analysts are saying. Average price for 12 months, $8.55. It's a 28% increase. Not too bad. And if you look at the analyst forecast, holy, by 2028, they see them doubling their revenue to 4.5 billion, and they see them only growing in profitability. I love to see it. If you look at the insights, Stock Unlock gave it a 3.2 out of 5 rating. We can see that price to sales, they're shading a price to sales of 3 right now, 2.95. 3-year average is 6.4. But realistically, since the IPO, the stock has only been dropping down as low as 540. And that is where I hope it drops again so we can load up on it. So yeah, if you look at the tech, that's pretty much the whole video. The main thing I want you guys, because the whole world and their grammar is talking about how there's a transition from big cap stocks that are overvalued into small cap stocks, the IMW or IMW or whatever. Let's see, because there's something I want to talk about too. IWM, iShares, Russell 2000 ETF. So people are buying this stock and this ETF. And one thing I don't like about this ETF is you need to look at like what 2000 companies you're investing in. Where is your money going into? So 0.4%, all these companies are not profitable. They're not profitable. Look at this. Their earnings are just going down and down. They're burning through more and more money. And this is what you're investing into, to these type of small caps. Why not find small caps, quality small caps like SoFi that are turning around and getting more profitable and invest in those? Because in the long run, SoFi will survive rather than this company that's losing almost $1 billion every last year. And they only made, what, $300 million in revenue. They're cheating at a $12 billion market cap. Is this really something that you need to own or be a part of? I don't think so. That's why I'm not against ETFs. I think there's a lot of great ETFs. And if you look at the Warren Buffett's book, I remember one of the main things that like stuck with me is he said, so according to your age is how much you should invest into individual stocks versus ETFs and the safe stuff. So for example, I'm 21 years old. So I would invest 21% into ETFs, and the rest I would choose individual stocks that I think will outperform the SPY or the other ETFs. And I see a lot of young people, everybody's really getting into dividend investing for the passive income and whatnot. And I think that's a really good thing. I'm not against dividend investing. I own dividend stocks as well, and they've been doing great. So can't complain. But back to SoFi. Right now, the chart is not looking very good. I believe Felix mentioned this, that they are under the 50-day moving average and under the 200-day moving average. If you're going to zoom in into this thing, let it load up. Not trying to. Okay, if you look at this chart, they're still right above. They're sitting on the 200-day moving average or the 150-day moving average. If you look at this, this is not SoFi. Oh my God, this is not SoFi. That's why I was confused. Looked a little different. Okay, we're back in SoFi. Let's see how the technical analysis is looking. And yeah, we can see they're below the 200-day moving average and the 150-day moving average. And it's not looking very promising in the short term. I would not bet big on this stock. I hope it goes down to fill this gap at $5.40. And then the CEO do the magic, the team do your magic and get the stock to $45. And yeah. Let me know what other stocks you guys are investing in. Please like and subscribe. If you made it this long, I love you. I don't know what to say. Thank you very much. And comment whatever stock you want me to talk about and I'll dig into it and I'll see what I can do. But that'll be it. Thank you guys for watching. I'll see you in the next one.